equation and ask how we can do it only from a single detector to have multiply indicators. A little bit change the phrasing. And this is how we get to what we get. And from the privacy, today, companies need to collect a lot of data, mostly private one, and rely on the subjective action of the user. The user need to do a lot of things to, by that, the company know about this user. And we want to change and ask what objective thing that appears and keep the privacy. So in our case, we don't want to collect any private information. And about the image, of course, we extract only vectors and keep it as a floating number, and the image keep in the company. So we are also operator, or only operator of data, and not controller, and by that, 100% of the privacy and anonymous of the person is kept. So by tackling objective parameter, one single point that we extract many indicators and keep everything in the company, we bring a solution for this topic.
Thanks, Ainu. So at HyperVerge, like basically our motto is to design for our end customers, and we always keep, whenever we design, we keep the best interest of our customers and their customers. So to address the data privacy point which Vivek has highlighted, we want our customers to make informed choices. That is building, the idea is that customers should be aware of what they are getting into and how we can make it very simple for them to understand, and then accordingly they can take an action. So by seeding the consent frameworks in our workflows, in our products, in our platform, we constantly remind the customers that this is an informed choice they are making. We try to localize it, we try to keep it very simple so that they know and they are informed. That's the core objective in every product, every platform which we take it to the market. And at the same time, keeping the regulations in mind.
If okay, I'll start with just to set the context for the session. The basics of KYC in terms of a world without KYC would be a very dangerous place in terms of financial crime, and it is. And there used to be a world before when there was no KYC, and nobody could keep track of financial transactions. Nobody could keep track of where the money originated from, where it is going, and over a period of time, we have evolved in order to have, I would say, 4 or 5 different concepts in KYC. First is around identifying your customer, whether it's consumer or wholesale. And in wholesale, the complexity is around the legal entity maps, and sometimes there are thousands of legal entities within a conglomerate and so on. But the first part is around identifying the customer. The second concept is around due diligence on that customer after establishing the identity. And in the due diligence, if there are some red flags, then you go through a process of enhanced due diligence. So these 3 concepts are usually at the time of onboarding and in terms of regular validation. And then the final and 4th concept is around transaction monitoring. And those are the basics of KYC and why we do KYC, in order to keep the world a much safer place. And the world is a much better place with KYC. So establishing ground rules for that. We now have a very interesting confluence between the incredible number of things that data science can do, connecting all the different data points, creating entity resolution models, to whether it's in transaction monitoring or whether it's in legal entity complexity, in order to establish the complex web. Sometimes in financial crime, the mule accounts and issues like that use a very complex web of transfer after transfer in rogue accounts, and therefore data science and technology can play an incredible role now in terms of the newer models and making a world a safer place by detecting true negatives, true positives, and so on. But the interesting confluence is now with the new data privacy bill that has been passed now in both houses of parliament. So the confluence that all of us responsible technologists and business leaders have to meet in the field of KYC is follow all the consent related requirements in the new data privacy bill, but also figure out a way to scan, filter, and weed out the bad guys and do the right thing, in terms of preventing financial crime. So I think technology can play a role in the data privacy piece as well. Overall, just the demand for some of these models and some of the new things that can be done just keeps growing up from both sides.
Thanks, Milind, for touching on the basics of KYC, and that should always be the pretext to any discussion around KYC, right? And so purely coming to data privacy, I think as a company, we have taken that stance right since Genesis. We have essentially extrapolated the consent layer architecture of India Stack, right? Today, for example, in the account aggregator framework, it's an entity requesting data from the consumer giving an informed consent for a specific purpose, for a specific duration. And with that consent, the data is pulled. So the same thing is also applicable for KYC. Now, there are not really, until now, there were not really stringent laws around it. Like, say, for example, the KYC data is fetched. What is the end use of that data? Where are the data governance policies there, right? So one of the classic problems with data is, it's not anonymized usually, and hence a lot of targeting, everything happens. Our data needs to be utilized for the purpose for which it was sought. Once we get down to that fundamental understanding, rest everything falls into place. But today, data, or rather, we have come from paper-based processes, right? I mean, all of our ID documents are all over the place, right? At least in the digital world, we know that, okay, there are digital footprints. Data should only be, so first of all, it should be end-to-end encrypted. The data requester should be able to encrypt that or decrypt that data. No one else. Everyone else should just act like a data blind tunnel. And post usage of that data, are you delivering the service, or you are using it just for due diligence? Fine. Due diligence or rather identity establishment is preliminary. Only if the customer is interested in availing the service, drill down deeper, right? Otherwise, there is no point of storing data, right? The ultimate objective is not for a financial institution to create a data store of its own. And these are fine lines between what you should be doing and what you should not be doing. And I think that's a personal take on things.
So in fact, Sanket beautifully put, in terms of the last piece that you actually mentioned, in terms of the objective of a financial institution is not to create a data store. I think, in terms of that, clearly in terms of establishes, in terms of what's the focus, I do remember that the first time I understood about consent was really in terms of when GDPR was kind of being discussed, and that's the first time I realized, and maybe I'm being very open and naive here, but that's for the first time I realized, oh, this is my data. I really thought for a very long time most of the information was bank's data. And I never really thought of it as my data. I said, I really hope the bank kind of allows me to get this information. That's really how I approached things for a long period of time. And the whole journey, and incidentally, in terms of one of the interesting pieces that Milind brought out, breaking down the whole KYC journey, most of the people assume that KYC is about customer onboarding. No, that's just one small piece. The whole due diligence piece of it, in terms of whether it's a good customer or it's a bad customer, that's really a very important piece in terms of that happens. Another interesting piece that I heard in terms of when Sanket kind of describing his company. He didn't call himself a financial institution. He didn't call himself an innovator. He said, the way I heard it is, while he said he's a software company, what I heard is that I'm a solution provider. It's just more, I help organizations go paperless. That's really in terms of where the journey in terms of, is there. And that's where in terms of, the next gen KYC solutions as I see it. And interestingly, in terms of one of the pieces in the pre-panel discussion that we were, Ido and me were talking about is true, invention. Let me use that word, invention, something that no one has done. What is that possibility? People are going to say it's impossible. What's that impossible dream that each one of you have? And the idea is not to really in terms of say whether it's possible or not, but the idea is just to see in terms of how much are we pushing the envelope. So, Ido.
Thank you. I will answer it with the topic of Gen KYC. I want to ask you what you think is the new Gen KYC purpose. Is to avoid people or to allow new people to get in? If 95% are rejected, so maybe we need to think also in a way that's our next gen should be how we can allow people and not to get far from their ability to get services. With this question, we have two metrics in the company that we measure, and we call it, it's not we call it, in Israel we call it Bonen ladder. Bonen ladder is actually 4 steps in letter that describe innovation. The first one is really easy innovation. Kind of think about Excel. The second one is a little bit more tough. Today, for example, autonomous car, been solved. We can improve it, but it's been solved. The third one, we know that it can be solved, but it is dramatically hard. Think about flying to the moon. We know that it's there. Somebody succeed, but it's really hard to get to there. And the fourth one, no one succeed to do that, or even think about it. And here I want to add, for the business parameters, the first step maybe can improve something in 10%, okay? You cannot beat, if you are a startup, you cannot beat companies with 10% approved. Don't try, you will lose in the beginning. The last one, the 4th step, it makes 10 times better than what exists now. So now you are in the letter with some business metrics. When we look on innovation, and when we started, we also ask how we can have a barrier to other competitors. For example, people, very smart people that's now, for example, graduated from the best Ivy Leagues, if it's from India or the state. So we push our border with the ladder that I described, with the metrics of business, with the barrier. How hard is for new people to actually start to do that, and with the concept that we want to allow people to get in the 95% and now use the KYC, the old one, to avoid. Let's change the metrics from next gen to allow people and not to try to step them back from success and take opportunities and buy education, health, insurance. That's the banks like Kotak do. So I hope that I help a little bit with innovation and barrier on that one.
So from a dream perspective, Vivek, the general, I just try to keep it very simple here, is that the idea of identity is that it is a foundation stone for building a more financially inclusive society. The challenge what we have got in doing any sort of transactions is that you're not able to identify who is at the other end, or where you are receiving the transactions or any sort of exchange that is happening in the society. So, a society, so from a vision perspective or a dream perspective, I would say everyone should have an identity. They should be able to, we should be able to verify and validate, and then there is a trust in the society so that the business is happening. And we are able to build a more inclusive system where the goods are reaching, the services are reaching to the individuals for whom it is meant for, right? And what is the basis for that? As long as you know that where it is going. So identifying the transactions seamlessly with less and less paperwork, more in an automated fashion, creating an efficient ecosystem which is more inclusive on the basis of the identity is something, I would want to work towards, and as a company we are striving for.
Yeah, no, in the book, Innovator's Dilemma, Clay Christensen mentioned that there are two types of innovation. There is efficiency innovation and there is disruptive innovation. But sticking to the topic of KYC, we have two types of players. There are the good guys for whom an efficiency innovation in KYC should be the easiest way of getting their job done, getting their day-to-day daily activities done, including the banking activities, transactions that they want to perform, accounts they want to open, services they want to avail. So I think we will continuously break barriers in better and better efficiencies aided by technologies in order to make life seamless for the good guys in KYC. For the bad guys, now technology in terms of efficiency innovation has to make life difficult and impossible for them. Impossible for them to have the transaction flows, mule accounts, and so on. So I think we are making great progress. The digital public infrastructure in India, including DigiLocker, starting with, of course, with the Aadhaar identity program, and then through COVID, the emergence of the video KYC facilities, eKYC, OTP, all of these, I feel are efficiency. Like video KYC is a great example of an efficiency innovation where outside of branch banking hours at your convenience, you can get the job done. So it's an efficiency innovation for the good guys to make life seamless for them. And in terms of disruptive innovations, some of you may have been to or seen videos on the Amazon Go store where with the customer consent, of course, you scan your card when you enter the store, and then you just pick what you want and you walk out. So in terms of disruptive innovations, within the right compliance framework and the privacy parameters, I'm sure just like consumer tech, we'll reimagine the future of video KYC and branch banking where people could walk in and out of the branches and get their job done much, much easier. That's a dream.
So as Milind rightly pointed out, for the good guys, the experience should be frictionless, right? And one of the fundamental tenets of that is also never ask the customer a bit of information that you already have, right? Because
or again and again.
Again and again, repetitive asking of information, and this is how things have been. And because things have evolved from paper-based processes, data still resides in silos. One business unit does not talk to another business unit. So many legacy problems. So, but driving efficiency is all about making that customer experience, frictionless, no repetitive information seeking and all that. But at the same point of time, maintaining a fine balance, and there are two facets to it, maintaining a fine balance between customer experience and compliance. Fintechs usually go all in for the customer experience and ignore the compliance part. Banks go with the compliance part and usually are not on, even though they want to, they do not know where to draw the line, in terms of customer experience. So the idea is to create this fine balance between and establish a framework for XYZ process, this is the baseline standard that you need. And it's very easy to actually establish that baseline standard. Because fundamental of KYC is as your risk goes up, your checks and balances need to increase in the system, right? For a 5,000, 10,000 rupees loan, cash loan, you can't put up like, say 100 different guardrails. Because then your cost of compliance is much more than what you are anyways going to make out of that loan. But if it's a 5 lakh rupee loan, you need to do in-person verification of that. Now with new age technologies, one of the things is it's great purely from a customer experience point of view, faster service delivery, but there are also inherent risks, like with new age technologies like generative AI and everything. It's a huge risk. Have we built systems to understand and filter out this risks that are posed? Like I can pretty much, and as AI tools become commodities, anyone could be able to create moving faces, impersonating someone, impersonating the voice profile. How do you exactly solve for that? So yes, today globally there is no answer yet for deep fakes and all those things, right? And both on the facial and voice thing. At the same point of time, there is continued research happening on voice biometrics, on how do you essentially do in-person verification. Video KYC is one of the mechanisms, biometrics is another mechanism, but how do you essentially do in-person verification in a digital world, right? So yeah, that still remains a topic to be discussed and risks to be ascertained, because one of the things that as technologists we are very good at writing code and building products. What we do not really understand is the risk part. And bankers understand risk first and then everything else.
I would like to comment on that one. I'm not sure that I agree. I think that the risk assessment today from face or biometrics is there. If you think, probably all of you know, what is fMRI, functional fMRI. When somebody get to MRI, they scan their brain and then they ask questions or want to understand several things. And today, we like Facetrom, we as the humanity, know to see only from the brain function what this person is thinking, even without, oh, he will say, or when he lie, by the verbal, okay? We can see it where is the light in the brain. I think that's, for example, we one step behind that, but further than what exists today, that's understand the behavior only from the face. Is there, it's running, and a lot of contracts as well. The next thing that I think that's not exist, and will be interesting, how we can understand the brain and what people think in real time, not as a biology in general, like in real time now, without any data that exists. And this is, for me, I can say that it's the next gen, actually the next gen. A lot of people think that's what we are doing is the next generation. We maybe run fast, but we already think in the backlog on the new thing. So the risk from biometrics, understanding the biometrics not as authentication. Authentication is there, no, already here. The next will be what we can understand about the person, brain behavior in the current situation without any data and not even a video to dimension. So only a short comment on that.
I think one of the examples, and Sanket, I'm speaking on your behalf, but where the heightened risk awareness in banks versus startups having spanned through both ecosystems. Simple example: an engineer in a startup is used to having admin access on their own laptops. It will never be given in a bank, because if an engineer in a startup clicks on some phishing link and compromises something, you're probably the extent of which the damage can happen if that happens in a bank, because your fiduciary responsibility for life savings of millions of customers. So there will always be that different level of elevated risk awareness. and therefore innovation in banking is harder, I feel, because with that elevated level of risk and compliance, and then you try to, but that's what makes life interesting also, that's what we aim for.
Oh, this is absolutely, this is absolutely gold in terms of what I've been listening, and I always say this, that one of the advantage, and more from a personal standpoint, one of the advantages of coming from a consulting profession is that you by default get to kind of exchange thoughts with some of the best minds. And personally, in terms of that's that's been brilliant. The discussion is such, trust me, in terms of I'm really kind of pushing the envelope, in terms of neuroscience, integrating that into KYC. Wow, do I think it's impossible? Yes. So it fits into the fourth bucket that I just spoke about. And I really love that, because that's something, does it bother you? Does it shake you? Yes, it does. And that's a good fit. And that's a personal learning in terms of what I take, what Milind mentioned in terms of innovating within guardrails. Extremely painful. Extremely painful. And and that's something that I continuously in terms of understand, because the risk assessment, as innovation happens, new forms of risks come in. Regulator also kind of comes in with new regulations, new supervisory mechanisms, and banks also have to respond to that. So the whole cycle of innovation and regulation is continuously kind of, feeds into each other. And that makes the process difficult, but as Milind rightly said, that also makes it interesting. Jay and Sanket kind of really brought some very, very interesting perspectives in terms of customer centricity, consent frameworks. Loved the point, Sanket, on, you're not creating a data store for a financial institution. It's the most, I think it's the most honest statement I've heard in some time. I really thought that I was the one who made those incorrect remarks usually off the room, but it's really nice to actually have that breath of fresh air in terms of this open conversation. And, explaining the whole process of a KYC journey. KYC, everybody thinks account opening form, literally. It's just not that, but it's the entire journey. And those are some things that in terms of I really got out of this panel, and I'm really glad, because trust me, when we actually in terms of personally in terms of when we started the discussion and revolutionizing due diligence was the topic, the first thing I thought is, how is a person like me who kind of works with different organizations, understands in terms of what is the journey, how am I going to even do justice to this session? I met the panelists and I was like, 99% of my job is really easy, and the balance 1% is me just getting out of their way. But thank you so much. This was just some points we thought we'll just kind of put on the table. You've been a very patient audience, and this is just a brilliant panel, and I'm extremely fortunate to actually have been given the opportunity to moderate this session. Thank you so much. Oh, yeah. Is it fine? Yeah. So also, one of the, I'd probably start off, I'll take this on a lighter note. One of the downsides of being in a professional services firm is that you end up kind of launching some report or something just so that people have some memory of you that I was there. We spoke about privacy. We spoke about the whole Digital Data Protection Act kind of coming into place. What we have attempted is that there is a lot of talk on how important consent frameworks are. And what we have tried to do is contextualize digital protection in the light of specifically the FS, financial services ecosystem. We've attempted in terms of what are the processes or what are the aspects in the life cycle of the journey that it impacts. You can be a financial services institution, you can be a fintech organization, you can be a global capability center, you can be anything. How does it change your life? And that's an attempt we have made through this report that we have. There is a lot of flowery language that we use in our launch as well. I've stuck to the framework that the panel set, that we'll keep it real. So it's just an honest attempt we have made. I hope you enjoy the same, and thank you so much.
Thank you so very much. Gentlemen, I request you to step forward along with the report so that we can unveil it and share it with everybody here in this room. And ladies and gentlemen, we'd also like to let you know that we have copies of the report right here available with us. For those of you who would like to have a copy, please do collect one right here at the desk before you leave. For now, gentlemen, do step up forward, and let's all have each of you unveil this report for us. As you can see it up on the screen as well. And a round of applause from each and every one of you, ladies and gentlemen. Indeed, a very iconic moment right now. Yes, here we go ahead, and together, I guess, we can all unveil this. Request you on a 3, 2, 1, and here we go. Open up this report for all of us to share. There you have it, ladies and gentlemen. Once again, indeed, an iconic report. Ladies and gentlemen, you need not rush. Do not worry. We have copies for everybody. We assure you that you will all get a copy. Thank you so very much, gentlemen, here for this. And